Let's begin. Well, I'm before I begin, I'm just quite curious. Since today is polling day, right? And today is a Saturday, do you all get off in lieu? Are you all given like additional holiday or something? Or there's no holiday at all? Oh yes, or meaning there's a off in lieu lah. So I'm guessing every company must give their off in lieu lah. Cannot don't give lah. Okay, let's begin. So, on Friday we have our NFP, and NFP turns out to be quite all right. The jobs are still stable, and unemployment rate also maintained at 4.2%. Okay, and it does seems like things are relatively stable because this is the first NFP number since the what do you call that day? The Liberation Day lah. Okay, so the Liberation Day happens on 2nd of April, and now we are looking at how our jobs affected from for the month of April lah. Okay, and it does seems like nobody is getting fired as a result of tariff lah. Okay, of course, I mean there are tech companies that are laying off people, but in a grand scheme of things, everything seems stable. Okay, so now the stock market have recovered back to the pre-liberation day level. But I do think that the overall the inflation, the danger of inflation is still there. Okay. So now, as I mentioned, back like a few months back or a few weeks back, that the cause of rising inflation, right, it is induced by tariff. So in fact, this drop here, it is also mainly due to tariff, okay, or I would say potential tariff. It is mainly due to potential tariff that is um being the market kind of corrected, okay. But as we have looked at some of the Bloomberg videos, they are trying to get some sort of agreement, trade agreement with different nations, okay. And perhaps with all those agreements being done, the tariff may still be removed. It will still be lifted, but whether or not US will get a good trade agreement with China, that is another issue altogether. So I do believe that the market is still pricing in some level of tariff to remain, but it is not going to be as bad as what the tariff values are currently right now. So the proposed tariff were quite ridiculous. Like we have over 200% tariff on Chinese goods, we have over 90% on Vietnam goods, all this kind of stuff. Okay, but we are on a 90-day pause. So the market definitely have not priced in full effect of tariff. Okay. In fact, the market is pricing in there will be some level of reprieve from the current tariff level that we are seeing after the 90 days pause. So I guess this 90-day pause is for different nation to come into some level of agreement so that the tariff can be removed altogether. Okay. So that is to say, right, the overall downside risk of tariff is still there. Maybe it is not as bad as what initially thought, but it is still there. Okay. And we no matter how low the probability is, we still have to entertain that scenario. And on top of which, we also have FOMC coming up next week. And FOMC also, they have no idea how tariff situation is going to be like, but I would say that their decision will be independent of tariff situation. Okay. But on another hand, no matter how independent they want to be, in terms of tariff are still going to affect inflation, and it is the mandate of the Federal Reserve to control inflation. Okay, so they can't really sort of like, okay, we're not going to care about tariff. They can't do that completely. Okay, so it will be interesting to take a look at the May's FOMC session, mainly because it is the first session after the Liberation Day. Okay, previously, the previous one we had was back in March, and that was before the Liberation Day, and a lot of development have taken place ever since then. So it will be good to take a look at what will happen in May also. And with that said, right, let's kind of get into the portfolio. So currently the portfolio right now, you can see I have very, very minimal position right now. I believe you guys are also in a similar situation. So looking at the dashboard, my overall performance is still very flat. Okay, I'm up about $5,000. I'm about $5,000 year-to-date ROI 1.71%. Okay. So on certain year, we do start off very flat. And then over the second half or over the second quarter, things will start to improve. Okay, but we do have to respond to what is going on in the market. And considering that even at this level, S&P is still negative. Okay, even at this level, S&P is down about 5%, and we are still somewhat flat, meaning to say we kind of managed to make through the tariff situation without any damage. And of course, I believe some of you are probably performing better than I am, because I have taken some losses on some trades that which are not supposed to be there. For example, in my open position, I still have the S&P 500 futures. Okay, and that is still contributing to about 11,000 loss. Although it has narrowed by quite a bit. Previously, it was down by 30,000 like that, but now it is down to about 11,000 now. Okay. And last week we have closed off a few trades. We have closed off Shake Shack, and we have closed off Builder First Source. So my Builder First Source, I don't really have very major profit from it. It's only about $1,600 in profit, not a lot. And in fact, for Shake Shack, right, I actually lost money. I actually lost about $500. Okay, but that is all right, because when I put up the trade Shake Shack, my strike price was slightly different from yours, and my entry was also way earlier than you guys. Not way earlier but slightly earlier than you guys. So my entry initially was somewhere around here, I believe. And then my strike price was 95. My strike price was 95. You guys strike price is around 90 okay. So because your strike price is around 90, right, when the rally happened on the earning day, the option goes into the money, and you are able to obtain a sizable profit. But for my trade, the strike price is at 95. So because of that, it on the earning day itself, it didn't even hit 95. So my profit wasn't a lot, but what I managed to do was I managed to narrow the loss, because before the earning day, right, I was losing about $2,000, very close to $3,000 on Shake Shack. But now I closed the loss to about $500 or $400 only. So in my books, it is still a win. Okay. And we have entered VIX, and we have entered Barrick Gold short position. So now, for VIX, right? VIX is there for any kind of tail risk event. Okay, it is there as a protection until end of this year, against any kind of sudden tariff shock that may come in, and then the market simply just crash again. Those kind of situation. Okay, so that is there as a protection. And with VIX in play, right, it will also allow us to confidently take a few long position, because right now the market being so bullish, right, we are not really able to enter any kind of short position for now. Okay, so this VIX position is extremely important, and if you do not have this position, right, I highly encourage you to put up this position. Whether or not this VIX will go into profit, we don't really care, but the fact that we have this VIX as a hedging position in our portfolio, it will allow us to confidently enter other long position. And if market were to continue to be bullish, right, we can profit from those long position. So without this VIX, and you enter a bunch of long position, like overexposed to long, and then the market suddenly crash, right, you are going to lose a lot of money. But with VIX in play, we don't really need to scared about market crashing, because if market do indeed crash, we have this VIX option that is helping us to cover our losses lah. Okay, so now for open position, like I mentioned, we don't really have a lot of position here. The Transocean position is still there. I consider it as dead ready lah. Okay, I'm not even updating. Oil prices are down quite bad lah, and due to tariffs, and VIX position is there. I put here as bullish. I put here as bearish, even though it is a call option, mainly because this is a bearish position on the overall market lah. Okay, we will profit from VIX if the market crash. So it is a bearish position, and Barrick Gold a bearish position, and Alcoa a bullish position, and of course the S&P 500 futures, which is a bullish position. Okay, so nothing really much going on here. VIX and gold are a brand new position, and Alcoa is also a very new position. Okay, recently we entered. So the only thing that is on my portfolio that has been there for quite some time was the S&P 500 futures. And in fact, this S&P 500 futures was before the Liberation Day. Okay, so it is now recovering back up very, very slowly. So now going forward, I do expect gold to drop further. Yesterday it dropped quite a bit, but recover back. So depending on how FOMC goes, right? If FOMC decide to reduce the rate, then hopefully we will see gold dropping further. That's the current position that we have, and VIX I mentioned already, and Alcoa recently recovering quite well also, and hopefully it can break out lah. Okay, because this price level is very, very I would say undervalued lah, and I do hope this one can go up a lot higher lah, and our option is all the way until July, so we do have some time. Okay, we do have some time, and hopefully hopefully by June, right, the stock price is still above $30, and we are able to get the premium, and we are also able to get the overall we are also able to get the overall profit target towards $35 lah. Okay, so we got those two position out of the way already. So I did mention some position that we want to enter, but very hard to enter. And one of them is Dropbox, and we can see some weakness coming into Dropbox because it is the only red position on my watch list. Almost everything is green except Dropbox is red, so that there are some selling happening now. Okay, and the earnings is very soon also. So now the momentum is still on the upside, but if going into next week we can see a little bit more red candle coming in, right, we will enter lah. Okay, and I definitely do want to enter before the earning itself, which is on the 8th of May. 8th of May is on Thursday lah. Okay, so it is actually after the FOMC, so maybe we will enter on Monday itself lah. If we enter too close to the earnings, right, then the option can be very, very expensive. So this is something that we will definitely want to enter lah. Okay, we cannot wait for the momentum to go downward, because if the earning turns out to be bad and the stock actually get down, right, we are going to miss a very, very good opportunity lah. Okay, so Dropbox is one short position that I'm looking at. Another short position that I'm kind of looking at is Disney also. Disney recently not doing that great. Some of their new movies like Snow White, right? It was one of the most horrible show. I mean, not horrible in terms of the quality of the show, but in terms of financial lah. Okay, I believe Disney actually lost a lot of money on Snow White itself. Plus, I'm looking from the perspective of consumer spending also, and if inflation were to go up and consumer spending weakens, right? If you look at the ISM for services, it's not doing that great. We are still waiting for the ISM service to come out for April's number lah. Okay, it will be coming up next week, but nonetheless, the recreation sector is not doing that great lah. Okay, and majority of Disney earnings is coming from the theme parks. Not a lot of money from Disney Plus. Disney Plus, I believe, is considered a failure also from a financial perspective. So there are a lot of bearishness ongoing lah. Okay, and the earnings is very soon also, 7th of May. So now, I don't really want to chase both Dropbox and Disney earning. I'll probably go for Dropbox because the price is high enough, lah. Okay, and Disney is kind of like way at the bottom there. So for Disney, right, I will let the earnings take place, and based on the earning result, we will see whether we want to enter Disney or not, lah. Okay, so this is one short position that I'm looking at. And aside from that, I don't really have other short position. We will keep to Dropbox and Barrick Gold for now. So on the long position, as I mentioned yesterday, right, I do want to enter Credo. But for Credo, right, some of the option structures are not really that attractive. So what I will be doing is I will probably be entering a stock position, and the stock position we will try to do some covered calls lah. Okay. So because of this, you probably want to enter in a multiple of 100. So either you enter 100 shares, 200 shares, 300 shares, lah, okay, so that you can do cover call. So we will consider this next week. And aside from Credo, I am also considering AVAV, which is a defense company, lah, okay. And so far it is doing quite all right. It have rebounded from the bottom, and I do think that this one going forward, there's a lot of growth there also. So this is something that we will be looking at, okay? And there's another counter that I wanted to short, and it has been on my list for quite a while. That's Carvana. So Carvana is a used car. They sell used car, okay? And initially during this phase, right, I thought Carvana was like doing a dead cat bounce, okay? And given how the situation of the secondary market of used car, right, it's not really doing that great also. And with all the inflation, weaker consumer spending going forward, right? I would expect used car to drop drastically also lah. But for some reason, right, it is doing extremely well. It is doing extremely well. So it has been on my short idea for quite some time. So I don't really want to go and short the top also. And once again, right, the earning is in 7th of May. So there's a lot of earning coming up for counters that I want to short, but it is very dangerous to short at this kind of level. And the only I don't want to be holding multiple shots on companies that earnings are coming up on the same day lah. There's a good chance that maybe we lose all the trades, we lose all the earnings trade, and then we end up losing like 3-4 trades in a row, and a, it is not what we will want also lah. Okay, so that's basically all I have. So other long position, I'm looking at things like Burlington Store and Dutch Bro. I think Dutch Bro is quite okay since we already got rid of Shake Shack, right? Maybe the next one that we may want to take is Dutch Bro, okay? And Burlington Store also from the perspective of consumer spending, right? Burlington Store is more on the, how do I call it, more on the budget side, okay? It is not a luxury brand, so it is aiming at lower income, middle income kind of area, so we may consider this as a potential long position also. So for Dutch Bro and Burlington Store, these two trades are spotted by my graduates, and I look through their report and I think that, okay, both are actually quite a good long position, but we cannot simply enter them by themselves. We do need some kind of short position, okay? So we will continue to look for further short position. So we may enter some trade on Monday, on Tuesday. Dropbox definitely we will enter. Dropbox definitely we will enter, but the rest of the trade we will see how, okay? Maybe we will wait for the FOMC to be over first before we start to populate our trade journal also, because before FOMC things can be a little bit volatile, okay? So that's all I have, guys, and thank you for coming, and see you all next week. Bye bye. Have a good night.